The first set of developments comes out from the ATO. So later this month, the ATO is expected to release its draft ruling on royalties and withholding tax as it relates to software. The ruling will provide clarity over whether royalty withholding tax should apply for payments made for software under tech company distribution models. Ross and Jono are going to talk about this a little bit more later in the session. The next ATO update is on capitalised labour. So later this month, the ATO is expected to release its final ruling in relation to capitalised labour. An initial draft was released in 2019 and explains circumstances in which labour expense should be capitalised and therefore not deductible in the tax return. Look, primarily, the draft ruling included a number of examples, and primarily those were associated with the construction of capital assets, but the ruling did also provide for consideration of labour costs associated with the creation of intangible assets. So for those companies here with us today that create IP here in Australia, please be sure to engage on this when the final ruling is released, hopefully later this month. Next update from the ATO is with respect to intangibles and transfer pricing. So the ATO has always been concerned with the potential for taxpayers to grow IP here in Australia and then transfer that IP at low or no cost to an alternative jurisdiction. With then the future kind of a profit associated with that IP being taxed offshore. This has been addressed, I suppose, in a number of ways historically with the introduction of certain general anti-avoidance rules and the diverted profits tax. What's coming later this year is the ATO is going to release a draft PCG, Practical Compliance Guideline, that will enhance the reporting with respect to IP and require taxpayers to self-assess their risk with respect to certain IP arrangements where relevant. So again, for this sector in particular, where large amounts of value are housed within your IP, this is definitely one to keep abreast of. Next set of updates is with respect to R&D. First to note is that the R&D concession announcements that came in with the federal budget last year go live with effect from 1 July of this year. For certain companies, this includes changes to the amount of R&D refund that can be claimed, but also changes to procedures with which you have to follow to make those claims. So if you have R&D claims, do make sure that you're across that. In addition, and excitingly for this group, the ATO has recently announced that they're going to run a collaborative workshop with representatives from the industry, many of whom are here with us today, to improve the understanding between government and the tech industry on the application of the R&D concession for the sector. For those of you that kind of read the AFR regularly, you may have seen a letter that was penned by several high well-known founders and groups that sought to engage on with the ATO on this issue. So do watch this space. Next set of updates is with respect to wage subsidies and COVID and the interactions with the wider tax legislation. So some companies in this event may well have claimed JobKeeper or some equivalent wage subsidy in an alternative jurisdiction. Just two things to quickly highlight. First of all, the wage subsidy typically works in accounting to offset or reduce your expenses. For certain transfer pricing models, that actually has the effect of pushing the wage subsidy profit element offshore and effectively have that taxed in an alternative jurisdiction. The OECD has come out and released some guidance, and tax authorities themselves are now starting to form positions with respect to wage subsidies in TP. So if you claimed a wage subsidy and have operations overseas with which you apply transfer pricing, please do make sure to take a look at how your wage subsidies have been accounted for within that TP calculation. Finally, on the wage subsidies, just to note that there are also similar interactions between the wage subsidies and R&D calculations, your R&D concession calculations. The ATO has released some guidance there. Again, if you've got wage subsidies and you make R&D claims, just would be wise to have a look at how those calculations are being prepared and the most recent guidance. Last but not least, just an update on US tax reform. So with the inauguration of the Biden administration and the Democrats taking control of the House and the Senate, tax reform in the US is very much back on the agenda. In recent weeks, we've seen several developments and proposals with respect to US tax reform. Some broad themes that flow through those proposals include an increase in the corporate tax rate and potential changes to FDII, GILTI, and BEAT that were introduced by the Trump administration and kind of seen as encouraging offshore investment. So for those companies that are US inbound, or for those companies here today that have US operations, this is definitely one to engage in. Okay. That's it from me, a very quick flyover of a number of different developments.